If you love our crypto content or are looking to learn even more about crypto, be sure to check out and subscribe to our new YouTube channel after this video dedicated to all things crypto. Find new videos every week. Be sure to check the link in the description.
It's great to get you on Real Vision. I'm really excited about this conversation because I think most people have seemed to be very US-centric in this whole thing that's going on. So I really wanted to chat to you to get some broader ideas of where this is all going. But before we start that, how the hell did you get into this in the first place? Tell us your story a bit.
Hi, Raoul. First of all, thanks for having me. It's a great pleasure. I've been a big fan listening to your show, and exciting to hopefully contribute a bit and bring in yet another perspective. Well, how did I get into crypto, or more broadly digital asset space? Actually, there was a kind of two phases. First, it was in 2012, where a big trigger was my brother, who's a tech geek, the guy who would always work in his teens already on dismantling computers and trying to put together different types of computers, got into mining of Bitcoin, etc. And then I started looking at it and found it interesting as a concept, but not yet really kind of getting it, to be quite frank, just dabbling with it a little bit. Then the real trigger for me was in when the Ethereum white paper came out, because that was a time when I was managing a family office in India. You may know that the Tata Group, and Ratan Tata is an Indian industrialist. For him, I invested in various companies and technology companies across the world. And what kind of was striking at that time to me was kind of if we interacted with these Silicon Valley entrepreneurs or China-based, India-based tech entrepreneurs, it was always that kind of notion of leveraging today's internet infrastructure to monopolize data, to monetize it in a way. And at some point, I felt it at the cost or sometimes disadvantage of the user, of you and me, of everyone. And kind of that then triggered that almost fear of where this would lead if we continue to do and do business this way, leveraging today's infrastructure. Then came across the Ethereum white paper, and for me, it then triggered that element of, okay, now I learned that we can transfer originals and not copies from me to you at any point in time, as long as we have access to the internet and there's no intermediaries involved and settlement times are short. That was the big Bitcoin invention. And now with the smart contract capability of Ethereum, we can make these assets smart, and with that kind of find a way to give back control to people of their digital identity, but also how just anything of value is transferred. That really triggered the libertarian in me. And so I went through this phase of 14, 15, 16, 17 of just, commingling with these great founders from around the world that were launching projects, going through the ICO hype, investing, knowing that there was not a security.
But how do you even know where to start? So you see the Ethereum white paper. Who do you reach out to if you're like, what? And what job were you doing at the time? Were you still working for Tata, running the family office, or?
Yes, at that time I was managing Ratan Tata's family offices, R&T associates. It's basically a very broad mandate just for him personally, investing in tech. No real scope in terms of what stage or what company. Was a wonderful to be traveling with
that's
him.
That's an opportunity,
and see the world. And at some point we also invested in actually Bill Bartlett's company.
Hi, I'm Raoul Powell. Sorry to interrupt your video, I know it's a pain in the arse, but look, I want to tell you something important. I can tell that you really want to learn about what's going on in financial markets and understand the global economy in these complicated times. That's what we do at Real Vision. So this YouTube channel is a small fraction of what we actually do. You should really come over to realvision.com and see the 20 or so videos a week that we produce of this kind of quality of content, the deep analysis and understanding of the world around us. So if you click on the link below or go to realvision.com, it costs you $1. I don't think you can afford to be without it.
See the world, and at some point we also invested in actually Bill Bartlett's company Abra, which today is also quite very well established actually in the crypto space. Bill was one of the first guys doing a a TED talk on Bitcoin, and so that was one gentleman, obviously, that then that was in my life, so to say. Very shortly after, I met one of my now co-founders, Luca, who was the gentleman who set up the Ethereum Foundation from a legal perspective, right? Swiss lawyer who had that idea of leveraging the Swiss Foundation as a means of launching distributed, fully decentralized infrastructure from a funding model. And so that's how you start, and then you build your network and meet great minds.
So when did you start building a business yourself around this? And what was your vision?
Yeah, so we then it was this last it was a bit of a hype cycle, of course, where we invested personally and also for the family office, but very much behind the scenes. Then realizing, okay, this is now the time I have to really focus on this full time. Trying with one of the other now Sygnum co-founders, Manu, we wanted to launch a fund and kind of combine or knowledge and provide access to more institutional investors to the space. Realizing it's just not possible. No infrastructure is in place. So many of the things that were happening were detached from reality a little bit. So we came together in 2017, four co-founders, and said, look. There's something big happening. It's a once-in-a-generation opportunity. However, we need to accept that future as heritage. And if we do that, we need to start building infrastructure that is scalable, that is regulatory compliant, so that we can help the ecosystem to bring about real adoption. And that was our thesis, to set up Sygnum at the interface of across Switzerland and Singapore, two strong hubs with many similarities but also differences, and to build a bridge between today's financial world, because 99.9% of the money and the flow is still, and at that point even more than today, obviously in traditional finance, and help to build a bridge to where we believe future finance will be. And so that was the trigger in 2017.
But you've got a banking license, which is a different way of doing it. A Swiss banking.
Yeah, exactly. Yeah, absolutely. So we are we don't call ourselves a bank with the tech IT department. We are a technology company. We're a technology group with a banking license. And why a license? Because we felt that. Again, that element of future has heritage, right? There is the future of where we all see the financial market infrastructure is headed, more decentralized, smart, using technology to make financial instruments and products smart, more efficient, and more accessible to anyone. However, also the acceptance that there's a heritage of excellence in banking, of regulatory frameworks, of anti-money laundering laws, just accepting that there's many of the things that we have in today's world will not just vanish, and hence we felt we need to combine this. And I can tell you, when we started, 80% of the people we approached, we told them we will build the world's first crypto bank. They were not really taking us seriously, but we did. We also made sure actually that we did not do a single transaction before we were a bank and had the banking license, to make sure that at no point, even 5 years down the line, any regulator or any other entity could come and say, you have legacy, you did this, not following the rules. So that we now feel we have the baseline to really, and the foundation to really scale and build a business across these two worlds.
And so what kind of services do you offer now? Now you've got the banking license. I understand, it's kind of not quite your libertarian view, because you've actually slotted into the traditional system, but it makes sense, and something I've been preaching, that we have to accept those things,
yes,
in order to move forwards. Because if not, you're fighting all the way. When we can slowly migrate people, if you just do what they need to do this and work with regulators. So what kind of services are you offering? What kind of clients are you attracting? Who's this for?
Yes, before I answer the question, I just want to tell you, our mission is to empower everyone with more direct access to ownership and value. And I know that you understand what I'm saying with what we're saying with this mission. And now you would immediately say, but a bank doesn't provide access and empower everyone with more direct access to ownership and value, because you still are a bank, and in that sense, you're a centralized entity. However, if you want to get to that state and to give people back more control, we feel it's a path. It's not something you can just switch on and then it happens at scale and truly globally. And hence that taking the regulators and taking governments, national banks along. So what we offer is basically we are a digital asset technology group focused on an all-in-one account approach across cryptocurrencies, stable coins, and asset tokens. So we offer institutional grade custody services, 24/7 brokerage trading. We have an options business on top, fully regulated. We have a Lombard lending business. You can collateralize your crypto with us and take loans in fiat. We have an asset management business run out of Singapore where we have funds of funds, exchange traded products to provide access to this asset class. And all of this focused in stage one on institutional investors, qualified private investors, and even other banks. So our clients are crypto foundations, brokers, exchanges, DLT companies, but also increasingly family offices and high net worth individuals that want to get into this space.
And you're in Europe, there's some similar, I'm not saying they're the same, but similar operations between people, like a blend between NYDIG, Galaxy. There's a few people trying to do this kind of institutionalization space with a multi-product approach in the old kind of banking model, but in this new world. How are you seeing this develop in Europe differently? I presume most of your clients are European, or you have a weighted average towards Europe, I guess. And what's going on there? Because it feels that adoption is slower outside of Switzerland. We'll talk about Switzerland in a bit, but just the overall view about Europe.
Yes, I mean, if I really carve out and do not refer to Switzerland, because I think Switzerland really is in this space a different animal, a special case, which, as you mentioned, we talk about. But Europe overall, yes, I would agree. Adoption is slower, particularly driven by, let's say, regulatory clarity not yet being fully there. There's a few countries that are catching up: UK, Germany, Luxembourg, a small country, Liechtenstein as well, which has a separate DLT law that they've launched. But in the grand schemes of things, it's not yet, the institutionalization process is, I would say, at the very beginning. That combined with, let's just say, in Europe, things generally being a bit more toned down, not the US Silicon Valley way, and we're going to do it and whatever it takes. These two factors combined lead to a bit of slower adoption. However, you asked about the client base. We have quite broad client base. Of course, it's Europe heavy, but also a lot from Asia, actually, increasingly. Yeah. So we are strongly set up across Europe and Asia from a footprint.
And I think there's a reasonable amount of intent of what you're trying to do by the people who are on your board and stuff like that. You've attracted quite an extraordinary group of people around you, right?
Yeah, that is also one of the key elements at the beginning of, again, highlighting that Future has heritage element that we wanted to signal that we do not take any shortcut. We have world-class governance. I mean, the fact that we have a former UBS CEO, former Swiss National Bank's president, and now vice chairman of BlackRock, on the latter on the former on our board and the latter as an advisor, and many more. That is also testament to us, again, playing that interface and making sure we can project and trust and bring trust to an industry which, let's be frank, in 2017, many people were looking at an institutional investor and say, well, I'm not really sure. It sounds a bit strange. I'd rather don't get into it, particularly those who were managing third-party money. And players like ours, we see it as our job to bring trust to this and hence enable also larger entities which manage third-party money to invest in the digital asset economy with complete trust. But even if you look then at our advisory board, we combine the two worlds also there. Bill, who's the CEO and founder of Albert, he's also an advisor to us, or Aloy Lu, who launched the decentralized Kyber network, right? So we are trying to bring these two worlds together across the governance in our company.
Yeah, and also, as you said, Europe is different. It's more conservative generally. So people want that extra layer of comfort to do things. As you say, it doesn't have the mentality, and that's a good thing and a bad thing. I just don't know as yet. Well, let's go back. Family offices in Europe are usually pretty aggressive. They will do things faster than almost anybody else I've seen. Asian family offices are pretty good. European family offices, pretty good. They'll adopt this stuff. And I'm sure you've seen a big active growth in the family office. But to get people like AXA or Scottish Widows or Robeco across the line, these big pools of assets, or corporations like LVMH or across the line, is really hard in Europe.
Oh, very much so. I mean, when it comes to family offices, I would agree. In Asia, I would say even more, slightly more aggressive or less on capital preservation and more focused on still growing capital than in Europe. However, I agree with your statement. They just don't talk about it, right? And it's their right. They just do it, and nobody really needs to know. So I think if we were to know really the number of family offices and the capital allocated, particularly to crypto, among European family offices, I think generally it probably will come out much higher than generally people would expect it to be, because they just don't talk about it. But your point around the big pools of capital, yes, that's a journey that will take time. If I then think back how the situation was in 2017 and what just happened in the last year in terms of institutional adoption, and thanks to the US and some of the players there who really opened up that path also for Europe and Asia. I think now it's happening, and we're seeing it even at Sygnum. I mean, it's funny to see now to have corporates starting to inquire on the treasury side using Bitcoin as treasury, for example. We even have a bank looking into this to use their own balance, to put Bitcoin on their own balance sheet, things that would never have been imaginable a year ago. So I think it's just coming now, and over the next 2-3 years, I foresee that it will become very normal, even in Europe, to do that.
Yeah, it feels that Europe's kind of 3 or 4 years behind in the cycle.
Yes.
Even in the news flow, you just don't see that kind of level of news across Europe. Part of it is the ECB have been very cautious as well. They haven't said no, but I think even the whole narrative around Bitcoin mining and its eco costs is actually driven from the ECB, because they have the ESG mandates that they force on everybody, and they want to slow adoption until they get their house in order. Where do you think, because the ECB is the big player in all of this, they need to make a decision, because Switzerland can reach its own conclusions, but the big pools of capital are basically regulated by the EU. Where do you think they are? Because you must speak to the regulators.
Yes, I mean, obviously, I always have to be careful when talking about what I feel the regulators think. But I think there's all regulators, also in Europe overall, but ECB specifically, they are putting a big focus on this topic right now. I think sometimes it's a bit of a hiding behind the CBDC kind of narrative and, doing proof of concepts and then coming out with messages. The digital euro needs to be safe and secure, statements like this that we've recently seen. So it's a bit like hiding in some sense behind the topic, saying we're doing something, but not really doing it, and at the same time figuring out how they want to deal with decentralized infrastructure, how they want to deal with Bitcoin networks and others. And here, I personally am very confident when I look at the narrative or how it has changed over the last 3-4 years, that awaited ban that we've now seen, for example, in Turkey, for obvious reasons, and has been portrayed that even the US may do. I mean, sometime back now, not anymore really. That will not happen. I don't see any signs. I think people are now realizing this is happening. The big local exchanges in Germany and beyond have launched Bitcoin trackers, etc. So it's gone too far. I don't think that a step back and a real ban of the asset class won't happen. So hence, I'm quite relaxed. It just takes time because they're figuring out what to do. And Switzerland, in the midst of it, has really given clarity. and has taken a stance, and hence has an enormous opportunity to.
So what did Switzerland do differently? You know, I was actually having conversations here on Ireland, the Cayman Islands, because they haven't sorted their shit out yet either. What did Switzerland do that helped them?
I think there's many layers to this, but very fundamentally, if you look at Switzerland, the political system with the democracy, direct democracy, subsidiarity principles, trying to push down decisions to the lowest level possible, the village, then city, then canton, then state, that kind of that attitude just lends itself, or that system just lends itself very well to understand maybe a bit faster than other political systems what's going on here. And at the very core philosophically, that a decentralized infrastructure with hundreds, thousands or millions of nodes that are kind of validating transactions or transfer of value sort of makes sense, because Switzerland is a very decentralized country, also a country which has not shied away from, for example, not joining certain political unions, staying neutral when others have said we need to, take a position. And hence, this was the base, that's the foundation on which made it, I think, easier to also take a stance faster. That's the foundation. Then on top of that, it was, in my view, a great combination of political movement or political backing, even by the government early on. I mean, years ago they said we want to become crypto nation. That was the put out, and then obviously this made it easier for the regulator to then allocate resources and really figuring it out fast. So I can say that we have worked since 2018, early 2018, then till August 19, very closely with the regulator to figure out how can we become the world's first crypto bank, following all the rules that any other banks in Switzerland does.
Do you think the Swiss saw that this was the future of the entire financial architecture of the world, and that they had no choice but to do it? Because one of the key things for Switzerland was being a linchpin in the global financial system. Did they get it? And how come they got it?
I think the how come they got it, I really think I would go back again to that, to my comment around just the fabric of the society and how the political system works, and just how people, for people operate. I mean, we vote here on things every second month or so. It's just we're so used to everyone contributing, finding compromises on the one hand side, but secondly also being small in the grand schemes of things could be considered irrelevant in international space, but have via innovation, via our banking infrastructure and banking industry always played maybe a larger role than we would expect, than 8 million people would do in the middle of Europe, not being part of the European Union. And I think that foresightedness has helped at several stages, but and again, I think this is what's happening here again. We are also almost, as I'm Swiss myself, so I refer to we have to, because otherwise we're not relevant, right? So we are pushed. And if you look at Singapore, it's a bit of a similar situation geographically where they are, and no natural resources, fully focused on leveraging the brain and pushing services. Hence, I think that's what leads to this breeding ground for that.
And so with all of this, there's another whole ecosystem going on, this Crypto Valley stuff. Talk a bit about what's actually happening on the ground in Switzerland. So it's not just a regulatory thing, there's a lot going on there.
Yeah, I mean, and that's something which I always, now I'm addressing you guys in the US, which I think is so underestimated. I mean, we have many of the companies that in the US will be just perceived as a US company have actually been set up in Switzerland. If you look at the largest crypto foundations, the protocols are out there, from Ethereum to Tezos, now that the launch of Dfinity coming up, the Web3, Polkadot, all these were actually set up in Switzerland, are still in Switzerland, have leveraged this foundation structure to launch their decentralized infrastructure, leveraging the legal system, the regulatory frameworks here, and also the talent pools. So we have in Switzerland hundreds of companies fully focused on crypto and digital assets. I would say we are probably the country we have at the most even now regulated financial institutions getting into the space. We have public announcements of cantonal banks. These are state-backed banks that are getting into the space. I don't know any other country or very few countries where this is happening. So there's a huge cluster forming or has formed. And so it's super exciting, and it's completely underestimated, actually.
I think that's true, because the faster the vortex spins, the more it sucks people in. As you said, suddenly it's sucking in the cantonal banks, and suddenly people are building businesses because it's a huge opportunity.
Yes,
it's an opportunity, a new opportunity to make and build wealth and businesses and all of those things. And we were kind of without that in finance for quite a while. It's been a pretty shitty world. And then suddenly it's like, oh my God, now we're at the center of the industry, of the world's biggest opportunity. And you can feel it in Switzerland. There's an energy going on that is really powerful.
Absolutely. No, it is. And I can also just tell you, as an entrepreneur, I feel so incredibly privileged of being at that point in that space. I think it's not a once in a 10 year, it's a once in a generation opportunity. What's happening right now, that we again can transfer originals now wherever we want, with just internet access, and actually making assets smart, rebuilding all financial products and more that we've done for many years in the same way and very centralized manner with technology. And I also believe we're just at the very beginning. What is tough, and that's true for Switzerland and also the US and more broadly, and probably for all entrepreneurs active in the space, is to cut out the noise, right? That there's so much noise around, and for me also, I mean, every day I have to remind myself, just focus on your thesis. Of course, don't stay stubborn, and then maybe you may have to tweak, but there's a lot of noise, and that ability, I just wish for everyone who's active in the space to never forget, because there will be months again, or maybe even years, of lots of FUD and people saying it's all going to go down and never coming back, and I'm not referring to price action necessarily only, right? So that is, I think which will make a difference, that hopefully we have thousands of entrepreneurs who can cut out the noise and judge and make their own opinions and base their actions on the basis of their own thinking, and not on just the thousands of small inputs.
I'm finding the opposite problem is the case these days. It is a noise problem, but it's less about the FUD narrative, because I think everybody in the space understands that there may be an ongoing cycle in the space. There's an up cycle and a down cycle. And I think nobody really cares any longer. They kind of see through that, so it's fine. It's the speed at which this shit's happening that is now way harder. The speed of the innovation, new products, new areas, all happening at the same time, and all trying to grab your attention span. That's hard.
Yes, I would agree, and I don't think it's contradicting what I said, because then for the individual companies, you need to always pick and choose, and where do you put your resources, where do you put your energy, where do you go? I mean, what is really long-term viable versus what is just maybe a hype, and that's what I meant, right? So it's kind of to carve out the noise and stay true to your thesis.
So there's three things I want to ask you about, because they're all coming, and I think people don't understand, and I don't understand them. Some of them are bigger than I think people understand. First is, and I don't know what comes first, I'm going to do it. The first one's Dfinity. What the hell is this? I'm hearing this from a lot of people. I try and look it up. I'm like, I don't really understand any of this. But it's like everybody in the world is backing this thing. What is it?
So first of all, I don't want to stand here and tell you, even before the actual launch, it will be on the 7th of May, and I'm personally super excited about that. I fully grasp it, because I think it's big,
and that's fair and honest, because yes, this space is nobody knows, right?
Yes, but I try. So I think just anything around digital assets is becoming more complex, and it started simple, but simplicity is also is great. So Bitcoin, it's very simple. It's a very clear use case. For me, it's store of value, transfer of originals, anything of value, no copies, no Twitter copying. That is the use case, and that's very clear and simple. That's the invention that Bitcoin gave us. Now, and then second layer, or the second stage, was Ethereum. And obviously more, but that's by far the biggest. Ethereum, smart contract, making assets smart, and with that opening up lots of use cases right now, obviously focused around DeFi and NFTs, etc. And now with Dfinity, basically there's a third or the next level of complexity that can be added, because we've reached a place where, or a level of adoption and a number of transactions, etc., that scalability and what you really do then within the contracts or with the smart contracts becomes so complex that managing computer power and storage becomes so important that you manage that at the core, right? And Dfinity has built, they call it into the internet computer, exactly that. That you cannot, when you talk about scalability, you don't just talk about number of transactions and throughput anymore, but rather how can you optimize in a decentralized manner also computing power, distribution, and storage, file storage. Basically, for example, they will go after the AWS's and Microsoft Azure's cloud infrastructure as one example. And one number I recently read is, if you want to put 1 gigabyte through the Ethereum chain, it costs you several millions, around 5 million. If you do that on the Dfinity chain, it costs you $5. Right, and so that is kind of that next. That's what they're trying to achieve. Basically, that the internet computer, as they call it, very bold, but I'm super excited about it.
And that's not there to compete with Ethereum or Bitcoin or anything else. It's just another layer within all of this. Operates in an interoperability layer. This is like the computing layer, the speed processing, that layer.
Exactly, it's the computing layer and the storage layer. Exactly.
Yeah, because it's kind of being referred to as like Internet 3.0 or 2.0, 3.0, I guess.
3.0, yeah, 3.0, exactly. Yes. And if this works, I mean, then, I think our brain cannot fathom what it would mean in terms of, opening up opportunities for, again, any individual from anywhere in the world who wants to build on something like this much more efficiently, faster than in today's
and it's
world.
Backed by a whole group of serious people and companies, right?
Yes. I mean, from the crypto world and beyond, and also based in Switzerland.
Yes, that's why I asked. The other one that's based in Switzerland, I think, is Diem.
Diem, yes. Libra now Diem, yes, yeah.
Diem. What is interesting to me about Diem that people don't yet understand is, I've been doing work on adoption curves and internet adoption curves and comparing them to Bitcoin adoption curves. And you kind of get to the next 5 years, we go from where we are today, about 125 million users of crypto, to 1 billion, just from growth of how fast it's growing and the kind of adoption curve. But in the next couple of years, Diem launches. And Diem is the world's largest network, of which you will all be able to get a wallet and be able to transfer value across it. Now, whether you like or don't their stablecoin, it's irrelevant. This is a game changer for literally the world, because it then integrates with everything else. It's bringing a digital system to everybody. So you're going to onboard 2.5 billion people. Sure, not everybody will, but you're going to onboard in one go probably 1 billion people into crypto.
Yes, I mean, this is such a difficult one for me to answer, because I really like the Diem team a lot, and they're super smart guys. I think the launch of then at that point Libra was, from a PR standpoint, was a bit difficult. Obviously, a lot of alarm clocks went off across regulators and central banks, etc. I know even regulators traveling across the world from where US to Switzerland and beyond to figure out what's going on. So that was a bit difficult. Now they changed a little bit and have a new plan. Also want to be regulated, right? Starting in Switzerland. I think there is a use case, but I think, and you're right, if they can indeed do that, I mean, it's a massive network from day one. If they can unlock. However, there's lots of challenges that they'll face, and hence in the very long term still continue to believe that a fully decentralized infrastructure that cannot be controlled as such by one government or switched off by one government or two or regulators coming in will ultimately prevail. But we'll see. So
yeah, I mean, they ultimately prevail fine. Some of that is our own personal opinion. But the guy in Ethiopia who wants to send money to his cousin in New York City or buy something, and he can just use it with his Diem token because he's set up on Facebook and he's got a wallet. I mean, he doesn't care about Bitcoin, doesn't care about decentralization. He cares about access to the global financial system on the level playing field where he can buy and sell goods. Now, again, as you say, it's not a distributed network. It's an owned network, but it can be a cluster within a much bigger thing. That's okay.
Yes, that's true. I mean, and there, I would agree, and I see the use case. And if they manage to manage the stakeholders in the grand schemes of things, few stakeholders, but powerful stakeholders who know exactly where to find Diem and what they do, right, and can go after them any point in time. If they manage to do that, then this will be huge, and I would agree.
Yeah, because then Amazon has to go down that route. Now, whether they create their own currency or create crypto rails, who knows? Obviously, the own currency route is favorable for them because these are like countries. They're bigger than countries. So to have your own currency makes total sense. Now, sure, it's a stable coin. Amazon needs to do this because if Facebook creates now a network of exchange of value using their own system, then that threatens Amazon, whose very business is that, but they don't have currency. So, again, I don't think people understand how game-changing this all is, how it all plays out. None of us know. All I know is that a huge group of people are going to be put on these rails instantaneously.
Yes, but the and I agree with you. But if you think back to the very beginning when you asked me what motivated me to get into the space, I said it's to find a way to take back more control. And that when I was traveling with Mr. Tata and found these companies to invest in, that one of the striking thing was always that I felt how these entrepreneurs, which are super smart, have monetized the data of people as centralized entities and becoming fewer and fewer because it's maybe not the winner takes it all, but almost kind of a situation. And the Amazons and the Facebooks of the world are such examples. If we now were to go down that path that you're painting, and you may be right, I at least for me, I fear that taking back control and making sure that not very few are controlling everything, we're not achieving.
That's kind of fine. And I'm just arguing the point here, not that I don't really have a strong view on this, but it's fine for you and I to say, well, we don't want Facebook to have control, right? We want our own control. But when you are the guy in Ethiopia who wants to send money or buy something, and it can't because the banks don't allow him to do it. So Diem gives him control. It just depends on what perspective you come from. Right, she can't get banking. So why should we stop that? Because that's giving them control back. At our level, we're like, no, we don't want to give it to this monopoly. We want distributed. They're like, I don't care. Just let me pay for my grains that I need to plant in my fields this way.
Yes, there again, that's a fair point. There's just one other element. Probably the guy in Ethiopia that you're referring to also doesn't really. It's not his main concern, but what we're seeing is obviously that such, let's call it then honeypots or centralized entities where lots of value is aggregated, are very attackable. And I mean, if you just look in the last few months again, I mean, I don't know how many hundreds of millions of data leaks, Facebook had a huge data leak recently. So it just kind of, if we were to go down that path over the next 10, 20, 30 years, we will just continue to have entities that build thicker and thicker walls to not be hacked, but concentrating so much of value and value transfer and infrastructure in a centralized manner that we will have, a significant further breaches and
I agree, and I
that.
think decentralization wins over time.
It's hard to
but it won't necessarily be winning all times in the race. But over time, well, I mean, everyone talks about stuff like this, and everybody forgets the fact that Google has more data on more people on Earth than any other entity in all recorded history. We talk about the Chinese government and Baidu and Alibaba. No, Google has more on everything. And nobody even asks. I've never seen a question is, how safe is my data on Google? How many hacks are there? Why? Because Google has to be a state-controlled enterprise to a certain extent. That's why you never hear about it, right? Its geopolitical importance is gigantic.
Absolutely. And that's one of the reasons, that's one of the things that I don't want to say worried, but which I think is a bit sometimes naive by Europe. Let's just say Europe, without going into a country-specific discussion, that if you look at this very base infrastructure, the large networks that people are operating on, like that we use every day right now, for example, it's all either, it's a big concentration, US infrastructure and Chinese infrastructure. Europe is basically running on, to your point, Chinese, mostly US infrastructure. And if you think about it geopolitically and think in the future, that's a very scary thing.
And I don't think anybody's got a plan, because the entrepreneurial environment in Europe has not been there to generate large networks. So it's been a problem, and it remains a problem because there's no political willpower to change it, and political will won't change it now. You need entrepreneurial will, because by the EU saying we don't want Facebook, but that's not easy, right? That's like Iran trying to do it and stuff like that. It doesn't really work.
Yeah,
and that moves me on to the final thing, which is the next big thing, maybe the biggest of all, is the central bank digital currency part of the equation, because, as you said, I pick up from the regulators that central bank digital currencies wouldn't have existed without Bitcoin. That's absolutely clear.
Yes.
They did it.
They wouldn't say that, but But they probably wouldn't say that.
Yeah, but they did it because they realized the world had changed. So it's a testament to how powerful this new technology is. And they're going to go down this route and onboard everybody basically into digital rails, which, again, if a government is mandating it, and not one government, but China, Europe, the US will follow suit, but a bunch of others, you're going to put 2 billion people straight into the digital world, where suddenly connecting with Bitcoin, Ethereum, tokens, NFTs, multiple payment systems, transmission of value all becomes natural and native. I mean, again, people kind of underestimate it because they're worried about central banks, they're doing this, it's not Bitcoin. I'm like, no, this is an accelerant. This is like throwing kerosene on the fire of this whole change.
Oh, I couldn't agree more. And I'm probably you too. I'm getting asked all the time, "Oh, what happens if the CBDCs are launched? Will Bitcoin go down? Will it go to zero? No use case anymore?" No, it's the contrary. It basically means even more infrastructure adoption and also knowledge and public debate about what the infrastructure does, what the technology does is there, and the integration and interaction with the also decentralized networks will be even much easier and common. Hence, I mean, it will be an enormous accelerator of it.
And it's clear that the ECB, who are the big player for us, because the Chinese one is more closed and more Asia-centric. So this whole Euro coin, whatever it's going to be, is probably the big change because the Fed don't look like they want to be quick. It sounds like they want to get this done within the next 5 years, but there's a weird thing here is, why would they try and compete with the private sector in terms of the rails? That's already there. You kind of, if they were to try and set up their own kind of ring-fenced digital asset rails and blockchain, it doesn't make much sense, right?
Why do you think they would compete with the private sector? I personally, for example, feel that it doesn't mean that if you have an ECB launched digital euro, so that it wouldn't make sense anymore to have a private sector issued digital asset or digital euro.
No, I don't mean that. I mean, why develop your own blockchain? So why not just use whatever that somewhere that the market is already innovating on and improving, and just say, fine, what we'll do is we'll build the wallet from central bank to people or banks or whatever access. We'll let you build your fintech layer and we'll use your blockchain. There needs to be something like that happens so the innovation can go on and it's not at central bank level.
Yes, I think that's a psychological thing of trying to keep control of something because probably central banks feel control. We do it ourselves means we have it under control and it's ours. But at the same time, I give you an example in the US, right? Also, if you think about what the largest contract of the Pentagon is today, it's actually with AWS. So that means it's not controlling it themselves anymore, having their own server farms which are fully within their walls. It's the innovation is so fast that actually they've chosen we need to work with a private sector company. And I think it's a bit that same element. That's holding on to. We need to control the base infrastructure fully on the one hand side, and then you have the technological advancements which are exponential on the other hand, and it takes some time for, let's say, central government and national banks to understand that actually you can't block or stop an open ecosystem where you have hundreds of thousands of people making it safe, secure, and innovate on it, right? No national bank can, in my view, in the long term, do that because they're...
It's like, why set up a surveillance state when you can have Google operating and doing it privately, zero cost for you. You just need to help maybe protect some of their data. That's zero cost for a surveillance state. This is what's going on. So I kind of feel the same. When I speak to people like Jeremy Allaire from Circle, and I know he's biased in this, but I think he's probably right. He's like, why would the Fed not use USDC or one of these stablecoin infrastructures that can be Fed coin, stablecoin? It doesn't really matter what's on it, but just use that. So let the private sector continue to innovate. But the bit that they need is the monetary transmission mechanism they own, the Fed own.
Yes, and I think the one key decision that all the central banks will take is whether they want to have a wholesale or retail CBDC. So, for example, in Switzerland, the national bank decided that they don't want to have a retail CBDC. What this means is not every individual having a wallet and accessing the digital coin directly, but rather just the banks, so that it's and then the banks then distributing it as it's actually in today's system. And in such a wholesale environment, a wholesale CBDC environment, there are very much I'm convinced that we will have actually both. We will have national bank issued such tokens, which then interact with privately the USDCs that we have even launched ourselves, the DCHF, the digital Swiss franc, which we use for settlement purposes, with that then are interoperable with privately issued coins, because there's different use cases, particularly when it comes to settlement of asset tokens, etc. So that's a little bit how I think about it. But the Chinese, of course, is different because they have a different purpose and goal. It's control again, but down to the, someone buys a chewing gum and I know where this was and how much they paid for it. So that's a different philosophy that they're following. So they...
I don't know about that. I think that's a Western-driven narrative because I think the West does the same, just in different ways. So I'm not entirely sure. I do understand that China desperately wants to get rid of the SWIFT payment rails, for starters. There's a whole bunch of other things that needs to happen. The over-reliance on the US dollar is a problem globally. Now, the US likes it because it gives its hegemon status, but it's 88% of every single transaction on Earth, and the US is only 25% of global GDP. It's unsustainable.
Yes, yes, that's true, and that's that fight that is going on right now. And I think if it goes on like this, and you know much better than I, because you've been analyzing the, let's say, the macro USD environment much more than I, then I think China has a chance of at least gaining some of this, because they're ahead, right, with this infrastructure and with rolling it out, and actually also already soliciting support in the region, let's say, right? So it's not just China anymore. They're operating way beyond that, even on the digital currency side.
It's all super fascinating. I mean, the good thing I love about this space is none of us know where this is going. We all know that it's going somewhere over there really fast, and we don't really know. And it's great because it opens up opportunity everywhere. Where, as a final question for you, what are you most excited about personally right now in this whole thing? What's the thing that you go, you know what, this is really cool, love this?
Oh man, there's so many things, but fundamentally is that I think we have now reached a stage in just the overall movement that that I feel so relaxed about, that there won't be any turning back, right? It will take time, it will be ups and downs, and there will be hype cycles, there will be frontier innovations, hundreds of new companies, 90% may fail, but the 10% will become huge companies, multi-billion-dollar valuations, and for good reasons. Right now we see that with, the DeFi and NFT space. I've mentioned it before, for example, where obviously you have people telling you it's just a bubble, it's just bullshit. But that's too short-sighted in my view. But overall, what excites me the most is that we have reached a maturity of this. It is a movement and the buildup of the infrastructure that is there, that it cannot be reversed. It can be maybe slowed down a bit regionally, sector-wise, but I think it's really happening, and hence I'm just happy to be in the midst of it, and in the flow, and knowing things change, and we have to be agile. And as you say, we don't know what's in 2 years, but the true north, where we're headed, is so clear to me, and so that gives me calmness, and I'm excited to be an entrepreneur in this space at this time.
It's an amazing time to be alive, and it's just amazing to see more and more people migrate across to this new world and understand it's not going away. It's not a hype cycle. It's not a speculative bubble. Of course, there'll be manias involved in it, but what it is an actual fundamentally the biggest change to the global financial system and exchange of value system in all recorded history is underway, and it's happening at lightning speed. And it's just brilliant to be here, right?
Exactly. Yes. Enjoying it every day.
Yeah. That's it. Great. Thank you ever so much for filling us in on some of your thoughts, what's going on in Europe, what's going on in Switzerland. And, without question, we'll get you back on, and maybe you can come and do some interviews for us at some point.
It will be a pleasure anytime. And I really enjoyed the conversation, and wish you a great day.
Thank you.
Thank you for watching this interview. This is just a taste of what we do at Real Vision. To learn more about the complex world of finance, business, and the global economy, click on the membership link in the description. Give us 7 days to change your life. This will be the best dollar you ever invest.